Market snaps a three-day losing streak amidst mixed global cues. The Nifty reclaims 24,800, most sectoral indices in the green, except for IT, realty and pharma. Realty and pharma amongst the top gainers.
L&T stock jumped after hydrocarbon offshore vertical bagged an order worth more than 15,000 crore rupees ahead of numbers as well. Asian Paints perked up in trade after reporting its first quarter results as it beat street expectations on most parameters. Management indicating that demand is picking up. IndusInd Bank, however, reports improvement in margins and credit cost dipped in the first quarter. Stock marginally in the green.
Paradeep Phosphates perked up in trade after reporting strong operational performance. Strides Pharma also surged on the back of an expansion in gross margins and improvement in US sales, while Kolte-Patil slipped after reporting losses in Q1.
Good evening. You're watching us here on Markets Forward, your go-to show where we aim to get you all the key data points to get up for the next trading day. I'm Mangalam Malu, with me, Reema Tendulkar. Today was slightly different from yesterday in the sense that yesterday we ended at the low point of trade after a recovery that we saw. But today, the dip was bought into and we ended virtually at the high point of trade. All in all, did not move much for the entire week, but between yesterday and today, there has been a swing in terms of sentiment. The Nifty Bank, led by Reliance and the broader markets, doing a lot better in today's trading session.
Indeed, the Nifty closing above the 24,800 mark, Sensex surging nearly 450 points. L&T, Reliance Industries, these were the two big heavyweights contributing on the way up. Mid and small cap indices also outperformed. Look at that advanced decline ratio, 2:1. And we've been having negative advanced decline ratios breadth for the last couple of days. So today, there was a bit of a relief. What also helped sentiment with a slew of positive earnings. So whether it's in Asian Paints, which came in the second half of the trading session, but so many other mid-caps which attract, like Tata Chemicals and Amber, Paradeep Phosphates. We'll discuss many of them, but you know, on the whole, there were more hits rather than misses in terms of, the earnings reaction. So let's also tell our viewers what we've lined up for them on the show today. We'll get to the top movers and shakers. Vivek will join in. On our radar is Happiest Minds, Asian Paints, a bunch of other stocks that came out with the Q1 numbers. And then we'll get to the key market events to watch tomorrow.
All right, so let's kick off the show with all the movers and shakers. We have Vivek joining in. Vivek.
Well, thank you so much for that. Along expected line, most of the names are of stocks that have delivered results and seeing strong reactions as far as the Q1 performance was concerned. First on the list, name that we don't discuss too often, but Apar Industries, this particular wire conductor company doing very, very well. A robust operational performance, much above what the street was anticipating. Order book very strong. That stock high by over 11% today. Paradeep Phosphates, like you mentioned, this particular company actually saw its EBITDA margin more than double on a year-on-year basis, 8% higher for that particular name. Tata Chemicals, after a while, you did see a very strong move on this particular name. Morgan Stanley double upgraded the stock from an underperform to an outperform, higher by 7%. Torrent Pharma, I had the call last evening. This particular call did see multiple analyst upgrades. Very positive commentary as far as the JB Pharma acquisition was concerned. Saw continued buying throughout the trading session. And Moltech Packaging, strong set of numbers. The company actually joined us earlier today, and they did say that there is upside risk as far as volume performance is concerned, as far as FY26 is concerned. Now, on the other hand, a few stocks that did see some selling pressure. Mazago Dock, weak operational performance, execution was muted. That did see some selling pressure, recovery towards the end of the trading session. Home First Finance, asset quality was over there. That stock sold off quite significantly at the start of the session. Poonawalla Fidelcorp, did give up most of the gains that it saw last yesterday. And IEX, this particular stock continues to see a very volatile trading session, a downgrade from Bernstein, ensuring their stock ended lower by 3% today.
And the target price set by Bernstein is 99, and that's the lowest on the street. And IEX took another down leg today. Jay Bala of cashthechaos.com and Sudip Bandyopadhyay of Inditrade Capitall are now with us on the show. Thank you very much for joining in. Jay, just for the benefit of our viewers, what's the near term for the markets looking like? And if one had to take a trade for the rest of the week, what would the bias be?
Yeah, it's not a very clear buy signal for the Nifty. I mean, the strongest support comes at about 24,400. Because Reliance is starting to bottom out, there's a potential that the markets might have seen today's low. But it's not a very convincing long trade. So if you can avoid it, it's avoidable. I would have rather preferred the market rise from strong supports at 24,400. But from a longer time frame, the markets remains bullish and expecting fresh all-time high from a 6 to 12 months perspective. The resistance for the Nifty is about 25,660. And let's see, if we have one more day of follow through, then maybe we can consider today's low as a important bottom for the corrective decline that started from the recent high beyond 25,500.
All right, so today's low is an important one to watch out for, and you do see potential all the way up to 25,500. Let's go across to Sudip Bandyopadhyay now. Sudip, one of the stocks of the day today was Reliance. Yes, L&T did well ahead of numbers, got an order worth 15,000 crores as well. But if you had to, attribute one stock which was a key contributor on the way up for the Nifty, had to be Reliance. Do you think the worst is behind?
Definitely. I think, we've been seeing this post the results which Reliance came up with. I think, there is very clear indication that the newer generation businesses have really picked up momentum. Whether you look at the Jio, where the ARPUs, finally the ARPU increase benefit is flowing into the P&L. And there is probably one more ARPU increase in the offing in the near future. So definitely that business is set. And, of course, there is a value unlocking opportunity going forward. Retail, you look at how things are improving. They have done the whatever pruning they need to do. And per store, the revenue they're focusing on. And I think that is a good thing to have happened. Again, value unlocking story is there. The new energy business already has started, getting commercialized, and a lot of products have started coming to the market. And somewhere there is a possibility of investments coming into that business as well. They are also looking at creating a separate FMCG vertical out of Reliance Retail. And I think this FMCG company itself, as things stand today, will be bigger than Marico and even closer to the size of Tata Consumer and Dabur. So already there, and I think it's growing rapidly. So multiple new businesses is gaining momentum. Of course, the O2C continues to do reasonably well. There are challenges in the pet side, but otherwise, that's based on global, whatever happens in the global markets. But otherwise, I think overall O2C also is started delivering. Their ability to refine multiple grades of crude gives them a leg up as far as GRM is concerned, vis-a-vis the Singapore standard GRM.
Okay, let's just quickly talk about Happiest Minds, because finally there is a good set of mid-cap earnings. In fact, actually mid-cap earnings haven't been so bad, whether it was Coforge or Persistent, which was steady. And now the latest is Happiest Minds, which is clocked in a 2.3% constant currency revenue growth quarter on quarter. Year on year, it's a 17.5%. Margins have expanded sharply. Margins have come in at 21.4%. And, bottom line has seen a bigger jump of 68%. But that's because the prior quarter had an exceptional loss. But, on the whole, adjusted numbers for the margins are actually very strong, expanding by 200 basis points, and the street likes this performance. Sudip, Happiest Minds is much smaller in size. Their top line is, I think, just, let me just tell you what the top line is. But the top line is, I think, close to about $165 million on a quarterly basis. So we are talking about an annualized number of, $260 million. So it's much smaller. But in the mid-cap IT space, which stock do you like?
Well, I think, I do like Coforge, and I believe that the market was a little harsh on it post the numbers came out. I think that's one stock to watch out for. They've been consistently delivering numbers, and they seem to be pretty confident about numbers in future as well. They are in the businesses which are definitely not slowing down globally, which includes travel and tourism. So Coforge is one stock which I'm definitely positive on. You're absolutely right. Happiest Minds, while they delivered a good set of numbers, but it's too small to make a big difference on the overall IT scenario, or take a view based on Happiest Minds results about Indian IT. Yes, they did well, but I think that's about that. And I think I will wait and watch to see what's happening on the AI front overall for next couple of quarters before I come back and certify or confirm that Happiest Minds is the stock to be in.
All right, Sudip, that's about Happiest Minds, new technology, etc. Let's talk about the traditional paint business, and that has been going through a fair amount of disruption. But amidst all of that, Asian Paints came out of their first quarter numbers. It was actually not as bad, as the street feared. In fact, it was a shade better than street expectations on a lot of parameters. Let's start with the revenue. Yes, on a year-on-year basis, there was a decline of almost 0.3%. But if you compare to the street expectations, the street was working with a number of 8835 crores. The company reported 8938 crores on the revenue. So there was a near 100 crore beat that came in. And that flew through all the way down to the bottom line. If you look at the EBITDA as well, the company reported around 1625 crores in terms of an EBITDA. The street was working with a number of 1600 crores, holding the margins at around 18.2%, the lower end of the management guided band of 18 to 20%. And we had the net profit, which was largely in line. 1117 crores what the company reported. The street was working with a number of 1127 crores. So no problems out there. The big positive was volume growth. Domestic decorative volume growth came in at 3.9% against expectations of 2 to 3%, and this on a base of 7%, telling you that maybe things are improving. The management went ahead and confirmed that as well. The growth was led by not only domestic decorative, but overall improving demand scenario. Remember, June was marred by a lot of unseasonal rains, but even if you account for that, the overall urban scenario is looking a lot better. And at a time when the stock has already seen a correction of almost 30-35% from the top, maybe the street expects that, competition or the worst of competition is perhaps behind, or they've set out to the new normal for the paint industry from here on itself. Yes, the margins were lower year on year, but that is nothing new because the company did say that it's on account of higher cost of sales and marketing spends that the company has been doing. Industrial paints did well, automotive paints did well for them as well. The stock from its lows has recovered about 15%, still off 30% from its highs. Jay, do you have a chartical view on Asian Paints? Because fundamentally, the multiples have derated quite a bit and there is a fair amount of disruption, but maybe with things improving from here on, the street is willing to give it a slightly longer rope. Chartically, what does the Asian Paints stock show?
The decline from October highs to the March low for Asian Paints is still quite painful on the chart, but it does seems to be forming some sort of a base. The stock hasn't yet broken out or not yet shown signs that it's starting to reverse, but the base building is a process of bottoming. So, probably it's likely to consolidate between 2500 to 2290. So, once it breaks out of the range, probably you can consider this. But, Berger Paints has a much better charts and much better relative strength compared to Asian Paints. So, if somebody wants to be allocating towards the paint stocks, Berger Paints are definitely a better bet than Asian Paints as things stands now.
Jay, Asian Paints 30% off its recent highs, 52-week highs. Is there a trade? Stock did well today.
No, I think I would avoid, from a medium-term perspective. I pointed this out when I was bearish on the markets between September and March, that it's clocking a potential double top. So, I think it's got some more, at least sideways work to do before it can be, fished for buying. So, at the moment, avoid being bullish or bearish, stay neutral over there.
Got that. Let's now go across to Bamakshi, who's here with a wrap of all the stocks that were buzzing after reporting their Q1 numbers. Bamakshi.
Well, Rima, first up, Paradeep Phosphates, this company had a good run in today's trading session, and that is because the revenue surged by almost 58% on a year-on-year basis. The EBITDA margins improved significantly from 6.18 to 12.41%, and the net profit was up almost 47 times. Apart from that, Strides was another counter that did quite well in today's trading session. It was up almost 3.5%. The revenue growth was subdued. It was only up almost 6% quarter-on-quarter, but the margins saw an improvement. US saw a 8% quarter-on-quarter decline in revenue, but an uptick of almost 4% year-on-year. The Axis market sees a 70% year-on-year decline in revenue due to donor funding environment, but nevertheless a good set, and resultantly the stock was higher. On the flip side, what did not do well is Kolte-Patil. Keep in mind that the operational update had already come in earlier, but this time around for the financials, they've reported a downtick of almost 76% year-on-year in their revenue. They've also reported a net loss of almost 17 crores as compared to net profit of around 6 crores in the same quarter last year. And lastly, take a look at Mazago Dock. This stock did not do well in today's trading session. They did see a revenue growth of almost 11%, but their margins contracted sharply from 27.4% to 11.4%, and the net profit saw a very sharp cut of almost 35%.
All right. Thanks a lot for that, Vamakshi. So those were a bunch of stock and result reactions that came by. Sudip, from all the stocks that moved around on the back of results, Vamakshi spoke about Paradeep, Strides Pharma, Mazago Dock, but there were some many others as well, the likes of Kolte-Patil, etc. Anything that stood out for you from the results that recently came? Anything that warrants a fresh look as a trade?
Well, Asian Paints is one stock which definitely impressed me. I think nobody was expecting the kind of numbers they came up with, and it's definitely worth looking at. Of course, the competition intensity is significant in that industry, and one needs to be careful because apart from Birla Opus, now you have JSW post their acquisition, who will be fighting in the market, but definitely deserves attention once more. Asian Paints, we can't leave it out. The other company I'll just mention it for a minute is Paradeep Phosphates. I think pretty good set of numbers, and I think it augurs well for the overall fertilizer industry going forward.
Mazago Docks, Sudip?
Well, I'm a little disappointed, honestly. I think the potential is significant, but the way the numbers, particularly the margin, I'm not too worried about the top line, but the margin, impact was significant, and the kind of valuation at which it is quoting, we don't have this kind of margin of error. And definitely this deserves probably a bit of correction further from here. Potential is huge from a long-term perspective, but valuation and the results don't match.
In Q4, the margins had come down to 2.8%, so things have been very choppy on the EBITDA front for Mazago Dock. Jay, any defense stocks on your radar?
I'm looking at Hindustan Aeronautics and BHEL, but today's price action is saying on Hindustan Aeronautics that it can bottom from current levels, but it hasn't. So this is on a wait and watch. So a day or two of follow through might change things, but it's a good sign that it's come very close to 44.50, and then starting to hold. That's an important support for the stock. Let's wait. At the index level, there was a double top which I had warned a few weeks ago. So at the moment, it's still an avoid, but the early signs are slightly positive from Hindustan Aeronautics. Maybe things can pick up from here. That's the sign over here. Nothing to fish yet, but that is a possibility.
All right, take that point, Jay. Sudip, thank you so much for joining in and giving us your view on a whole host of sectors and stocks. With that, we'll take a short break. On the other side, we get you all the top corporate voices along with the key market events to watch out for on the other side. Welcome back. You're watching us here on Markets Forward. Let's get you some of the key corporate voices that we had on the show today. A lot of the real estate stocks were in focus, and we did speak with Arvind Smart Spaces. The management is upbeat on the growth in the real estate industry, speaks about demand improving, and they said that they are on track to achieve 35 to 40% growth. Also moving from the last year, where some of the demand slipped into this year as well. The weekend home business in Mumbai on track, expecting momentum there. Almost 1,000 crore revenue potential. Also looking at some society redevelopment segments in Mumbai very seriously.
Okay, let's talk about Chennai Petro. It was a disappointing set of numbers. The company's gross refining margins came in at $3.2, impacted by inventory loss. That said, the company has a positive outlook on gross revenue, the GRMs going forward. They expect to perform well in the second quarter.
All right, let's wrap it up then with all the important events that you need to watch out for. We have Vamakshi on the wall. Vamakshi.
Well, Mangalam, a couple of important economic cues to watch out for. The first one will be the US Fed's interest rate decision. Apart from that, we'll also be keeping an eye out on the GDP data that comes in from the US, as well as the crude oil inventories. As far as some global numbers are concerned, we'll be keeping an eye out on Microsoft, Meta, as well as Alibaba. All three companies report their numbers tomorrow. Now, coming to India then, we'll be keeping an eye out on Tata Steel, Power Grid, Interglobe Aviation, Hyundai, CAMS, Keynes, as well as Hitachi Energy. So lots of earnings lined up tomorrow as well. There are 2 new listings that we will be keeping an eye out for. That includes GNG Electronics as well as IndiCube Spaces, and 3 new IPOs will be opening for subscription. This includes NSDL's 4,011 crore OFS, M&B Engineering, which is a 650 crore IPO, out of which 375 crores is the OFS, and Sri Lotus Developers, which is coming out with a 792 crore fresh issue.
All right, Vamakshi, thanks a lot for that. A bunch of events that will take place tomorrow, a lot from the primary market action, along with a lot of results too. Don't go anywhere. Stay tuned to CNBC TV18 as we wrap up on this edition of Markets Forward. We'll be back with more on the news and updates.